Welcome to Unlayered. Today, we're super excited to be joined by Josh Rosenthal. And by introduction, Josh is a multi-exited founder in AI, as well as more of the Web2 side of tech. Served on various committees in government, was the Ernst& Young Entrepreneur of the Year, and an occasional lecturer at esteemed universities like Harvard, Johns Hopkins, MIT. Josh is also an historian who holds a PhD in medieval and early modern European history, was a Fulbright scholar, now is a partner at Narwhal Ventures and the Sixth Event. And most importantly, huge proponent of crypto and has been making waves in the ecosystem for a couple years now, perhaps best known for his crypto renaissance theory, which we're going to get into all over throughout this episode. But Josh, thanks so much for joining us today and welcome to Unlayered.
No, thanks for having me. It's great to be here, and I definitely appreciate what you guys are up to for sure. Like your tone and the nature of the conversation, and exploring some of the alternatives and doing it in an intelligent way. It's a nice change of pace.
Yeah, we're going for that alternative vibe for sure, for sure. I think there's too much Marxism in a lot of these podcasts, and I don't know if it's going to necessarily shake out that way. So, yeah, we try to just keep an open mind here. Before we actually get into, because I think that the main focus of this episode is obviously going to be a lot of the analogies we're going to make with history and what's happening in tech. But I'm actually just curious for my own benefit here. I noticed some of your earlier companies that you exited were more in, like, I guess, the biotech space. I'm just curious to hear a bit more about your experience as an entrepreneur and how you actually got maybe orange pilled or crypto pilled, for lack of a better term, during your career.
Yeah, usually I focus on the history piece of it, but the entrepreneurship, basically I came out of the PhD and did a Fulbright over at the Sorbonne Institute for Advanced Study, which is like complex system stuff, and just couldn't really get a job or didn't want the jobs that were offered in academia. It seemed like it was going to be a zero-sum game. This is like a long time ago, ancient history. But even then, kind of the writing was on the wall. This might not be like a future growth opportunity. And so, back in, at the Institute, it was working in history. So manuscripts, you're looking through different languages and these old archaic documents, and you're working with this very permissioned, privileged idea, gaining access to different archives, needing letters of introduction from, heads of universities, in some cases, heads of state, just ridiculousness to get in the place to be able to look at this data, which is supposedly the people's data after it's been liberated, et cetera, et cetera. And so I co-founded with my wife and far better half and our third partner, and they're the brains. I'm very much the Muppet kind of character on the edges. And we, I had written a little bit of code, kind of looking at kind of social networks or Rizzo, and kind of trying to quantify, economic, networks over time and how they change, who the actors are and their interests, et cetera, et cetera. And the Institute was a hoot. So it's like historians like me, I'm an American sitting there in like the middle of France, lecturing them about their history, which you can imagine they loved that. I was sort of a caricature. And then you have the CERN scientists sitting around and you're all sharing research in this interdisciplinary institute. And so they're talking about string theory and what have you. And so a lot of it was around complex systems and working in different, using social sciences and hard sciences as well as computer science. So we founded a little company, which was natural language processing based. It was like an early form of AI, kind of a subset of, language models. You'd probably think of it as like Dragon and Nuance and that kind of thing. And this was just when some of the folks at Google were getting serious into healthcare. They're working on like transporting the XML standard into CCR. They're looking at, different ways of computing, but the bottleneck was data. The computing was taking off, but how would you get the data? And so we founded a company, and we're up in Portland, Maine, and back and forth between Paris, and then came out to the middle of Louisville, Kentucky, nowhere. This is before it was trendy to kind of get off the grid. Double, triple mortgage the house, and kind of went all in, raised a little bit of angel money, never did any VC, and essentially built a program, and then sold it to an MIT spin out, and then helped take them to a majority stake exit from private equity, and then double dipped and went back and did it again, this time around public data. And so there's large amounts of, government data, which is technically the people's data. We just don't know we have it. And there's a lot of, regulation around it. So that was a lot of the government work that I did on kind of congressionally mandated committees and kind of White House appointee type things to liberate that data. And a friend was named CTO of of the Department of Health and Human Services, and then he became CTO of the entire country, I guess. And so we worked on kind of liberating a lot of that data, and then we commercialized it. And so that was interesting in terms of thinking about the value of data compared to processing and how it's a virtuous cycle. So we sold that to a public company in 17 and helped take them back private. And then that essentially vested us out in 17. And so we're here in Louisville, Kentucky. We're founders first. And oftentimes one of the reasons why we avoided venture was sometimes there's conflicting incentives between venture and founders. Even if you're running a small fund like $100 million, you basically need $1 billion exit once you work through dilution and all that sort of stuff. And if you're a founder, you might not want $1 billion exit. You might be happy with a $100 million exit if you're like a super majority owner. And so the idea of how do you help people outside the power hubs, geographically, socioeconomically, and demographically, it became very important to us. And so we started looking at different funding models and ways that we could, invest. And this was just when crypto was coming on the scene. And when I saw it, it was interesting in terms of like giving advantage, to the little guy, down the distribution curve, and giving, asymmetric advantage to people outside power hubs. But also the code itself, it looked very similar to, a lot of the historical work, which, I had done basically, the ledger-based accounting and the advent of, communication, which some people say, the printing press was like the internet. We'll get into that. I don't necessarily buy that so much. I think it's more like crypto with elements of AI and a little bit of internet. And so, down to the code itself, it looked very similar. And the last time we saw this kind of significant change was really in the transition between the late Middle Ages and the Renaissance, or the rebirth of the world as we knew it. And so we kind of said, if history repeats at all, this is an unprecedented opportunity to get involved. So we essentially went all in on crypto, do direct investing, run the stuff ourselves, validate, index, delegate, and then our LPs and a variety of funds across different ecosystems. Some of the Ether-based folks like, Coin Fund or Standard or Parify, Multicoin, and those guys backing Solana from day one, and a host of other things. And so we run a little family office and a boutique venture and are just kind of responsible for ourselves. That gives us I always say it gives us the ability to do anything, but my wife would say it makes us 100% accountable. So we have disagreement on that.
Love that. Love that. That's super helpful. I always like to ask people about their backgrounds, because I think that's where a lot of us can get unique insights into what might happen in the future, pattern matching. Everyone's background is just so different, especially yours as a historian and kind of working in early AI and as a founder, then moving over to crypto later. And you brought up a few interesting points here, where you're kind of noticing similarities between this transition from the Middle Ages to the Renaissance. Let's maybe double click on that as a starting point, insofar as what forces contributed to the Middle Ages even occurring in the first place? Like, why do we call them that? I think people call it the Dark Ages, or at least I've heard that before in school. I understand at a high level it was like the fall of the Western Roman Empire, like the 5th century. But can you maybe tee it up for us and help us understand? Maybe aren't as well versed in history.
Yeah, no, it's hopefully, if this thesis plays out, if this really is a new renaissance, and I realize it sounds like hyperbole, but I'll get into the details. Right now we're early on in the economics, and we haven't really had the social scientists, the anthropologists, the psychologists, the historians come in and really plumb the depths of this. So hopefully if things develop, this will be unfolding in the future. And yeah, to your point, we kind of did everything backwards. We got into AI early and then got into crypto, which either that means we know what we're doing or we don't. One or the other. And so, yeah, the way to think about the transition between like the late Middle Ages and the Renaissance was, if you're in the late Middle Ages, there's like one thing. You can call it like hegemony. There was one power. There was a cosmic, a divine, material like hierarchy. There's a pyramid, and you were at the bottom of it. There was, a ruler that was divinely instituted, layers of bureaucracy and institution, and you at the bottom, statistically speaking. And that was the world you're born into, and your world was permissioned in every sense of the word. I usually pull on a couple different threads, like value and communication and identity. And value, you couldn't own land, you couldn't really own coin or spend it as you wanted to. It wasn't really for you. You couldn't leave your land, you couldn't travel. And I realize some of the medieval historians will poke out exceptions, but I'm just saying, statistically speaking, like 99% of the time, this is your world. And the crazy
Yeah.
part was it never occurred to you that the world should be any different until you had an unlock. You didn't know that you're locked into to a set rubric. And the same thing with communication. You couldn't share ideas at scale, partially because you couldn't transmit ideas outside of a manuscript. And those are like super difficult to read. And they're very difficult. It's not just that they're in weird languages. There's a handwriting or a paleography to it. And so you not only have to know French or Schweizerdeutsch or Catalonian, but coding it in like Latin siglia. So it's like very, very esoteric. No one has access to these things. They're incredibly expensive. And so if you have an idea to change any of this, you can't get, takeoff velocity out of that. And it never would have occurred to you to have communicated anything outside the world into which you were born into. You're like an agricultural laborer, and your parents and their 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 parents. And that's who you were. Your name might have been Farmer. It might have been Smith because of that. And so your identity was like essentially locked in. And so one of the things I look at is when change occurs. There's like different schools of history. Some people think that great men with great ideas drive history. Some people think it's conflict over a means of production. Other people, look at geography or kind of demographic structures, and all that's true. But it tends to create a very structuralist set that says nothing can ever change. So. And they're right for most of the time, like for centuries, nothing changes, nothing changes, nothing changes. And then when something changes, it changes slowly, slowly, slowly. And then already fait accompli, it's already done and you aren't even aware of it. And so I look at those changes. And so the change between the late Middle Ages, where everything was in a hierarchy, there's one set of institutions, economic, socio-demographic, even philosophical, to this like recreation of the world as they knew it came through. What drove it? It was really communities using decentralized technology. There's an advent of technology. It often happens in waves. And the first was, this ledger-based accounting. And this is part of the Renaissance. It was a return to classics, actually, back to Advantes. This has been, something in North Africa with Pliny and others. And so instead of having a centralized accounting book, there was something called a ledger. You may be familiar with it if you're into crypto. And so debit and credit and the basic idea was it freed up capital. There wasn't enough coin to perform massive transactions. Like as a story, right? The head of the Holy Roman Emperor, Maximilian, he's getting married. So he goes into a German town and he's trying to buy a wedding suit, right? And the merchant won't give him credit. And he's the head of the whole empire and he won't give him credit. He doesn't have coin on him to do it. That was like how gridlocked the financial system was. And so the idea of having a ledger, even if you couldn't read or write, you could kind of keep chicken scratches in this little thing that they called a wallet, and you took it with you. And it essentially unlocked and created, financial products, new derivatives. There's a Cambrian explosion of all sorts of craziness. It meant that economically you had a new substrate, which would allow you to get off the farm and go hang up your shingle, maybe be a farmer yourself as a new type of entrepreneur. Or, this is largely credited by historians as the advent of proto-capitalism, not just mercantilism, but, running your own business. The question then is like, how do you get the idea to do that? How do you get the idea that you could leave the farm, that the authority to which you are subjected from birth, and it's not just religion, like religion to them was the fabric of reality, right? So you were born into, you look at the Middle Ages and the Pope has, Holy Roman Emperor, like kneeling in the snow and begging for forgiveness. The reason was the Pope had excommunicated him, which sounds like religious, but what it meant was that every economic obligation and contract is instantly rendered like null and void, right? As well as all military obligations and fiduciary responsibility. And so it was inextricably woven up. And what happened with the Renaissance is it started to get peeled off. And folks like Luther formidably said, hey, Martin Luther, not Martin Luther King Jr. story. And so he said, hey, this divinely instituted hierarchy that you're at the bottom of, it's not legitimate and it's not the only one. And in fact, the meaning for you is not just off in the monastery. It's actually, working a job in this world and not just praying for your neighbor, but serving them with economic creation and generation, even using some of these newfangled financial tools. And so this was shared through the advent of the printing press, which is like a horrible idea. 5% of the population could read. Gutenberg would have got kicked out of every venture capitalist office. You can't have a protocol where you have like no market adoption. And what happened, and it's worth noting, that the decentralized technology was generative. It created the market. It wasn't just better, faster, cheaper. That was the first unfold. It actually created something new and unexpected in the market. It's like Jurassic Park, right? Like life finds a way. And so you're reading, not a book, you can't really read, but you can see these images, these Flugschriften, they're like memes. And you say, hey, this authority is illegitimate. maybe this other authority system, which is much more decentralized, is legitimate. It wasn't just that it wasn't it wasn't necessarily what Luther did. It was the fact that he showed how to do something else other than the system you were born into. And I'll just pause because this sounds crazy. You're listening to this and you're like, oh man, those medieval guys, they're so silly. Like, not me. I'm so glad I'm modern. But if you pull on those same threads, no, like everyone was permissioned. They didn't know they were permissioned until something else happened and it was unlocked. And so I see very, strong similarities into today. Like your finance, you think you own it and control it. You don't. You own medieval IOUs and contracts from Fidelity or what have you.
Mm-hmm.
You think you can pay money? Like, no, credit cards, Visa, Amex, like didn't, run a processing fee. They wouldn't let me attend. They wouldn't pay for Bitcoin conference. They knew it wasn't fraudulent. They just didn't like what was the content that was being discussed there. And so you have all that sort of stuff going on. The same thing with, communication. You think you can say anything you want to at scale. Obviously, you can get deplatformed, but the much more subtle form of control is changing the window and shaping the contours where you're not just shadow banned. The algorithms are working against you, not just because you're saying deviant things, but because they're maximizing, economic impact for the people who are at the top of the pyramid. And the same thing with identity, so on and so forth. And so this unlock created the idea of the other. It created massive economic generation, and it actually fractured, the Holy Roman Empire in a variety of ways. And it was chaotic and volatile and crazy at the time. But that's what happens when the world is being recreated. It's dying and, reconstruction, basically. So that's the crypto renaissance thesis in a nutshell, where I see, ledger-based accounting, very similar to ledger-based accounting. And the internet is a little bit different. There's aspects of the, printing, there's aspects of the internet where you're writing, there's aspects of crypto where you're owning the thing itself. And there's also aspects of both AI and the metaverse where print was seen as like black magic. People who read at scale and looked at these images, it was synthetic. They thought it would take away the artist's jobs. They left their location, they left their body, they read something and they went somewhere else and they came back with other knowledge, basically, that they wouldn't have been able to get anywhere else. It is these bi-directional portals where they were able to come back with knowledge and impact, change their life in the real world. So it was complete crazy. So that's the overarching idea, that we have these renaissances, not just fourth generational turnings, but these great grand sweeps every few hundred years. And it tends to be driven by communities using decentralized technology to unwind institutional hegemony, particularly when the technology outpaces the institutions. So I'll just pause there. That's the thesis. How about that?
Yeah, it's incredible, and obviously there's huge amount of stuff that we could go into there. But it seems strange, doesn't it, that obviously we started as like hunter gatherers, tens of thousands of years ago, completely decentralized, and just naturally there's this human nature where we'll just inevitably, you have the powerful few, don't you, who can somehow claim the authority and push the majority of the population down to the bottom level, even though no one would have chosen that from that original sort of completely decentralized state. So there's just sort of this seemingly natural push towards becoming completely centralized. And then it feels like it was only through technology, really, that maybe the tools were suddenly there to allow people to break away from those chains. So do you feel that technology is the only way really to break away from this? And why are humans so attracted to centralized society and institutions?
Yeah. Oh man, now we're getting into it. The philosophy and historiography, so there's a couple different ways to look at this, right? If you look at the grand arc, swinging back and forth through history, I definitely see it as this pendulum and a clock swinging back and forth between aggregation and decentralization. There's this there's seize and control of power. And it's really important to understand in terms of stability of a civilization, like the historiographers, they talk about it in like stages, basically. Like bureaucracy is a feature of the system. It's not a bug. It creates stability. Yes, it oppresses. Yes, it resists change. It resists empowerment and sovereignty and all that sort of stuff. But it keeps the system stable by benefiting the few. That's the argument, basically, at least. And that's like, depending upon how you want to get into it, you're right. That's like the historical starting point. That's what tends to happen. Anytime you look at an unwinding, it tends to be technologically driven, and specifically technologically driven, not just with any technology, but usually with this decentralized technology where there's something in the code, not just it goes to a machine, but like where it actually empowers distribution in a not just a technical sense, but even in a value accrual sense, where it serves as a liberating economic substrate, and where it also allows communication without censorship. And so the ability to like have decentralized exchange of value, so you can pursue activities which might be contrary to authoritarian regimes, as well as share ideas which likewise might be contrary to authoritarian regimes. If you don't have those two abilities, which are largely empowered by decentralized technology, it's really difficult to change that aggregation. And there's iterations of this, right? Like, I'm talking about the printing press, but you can go back to like, late antiquity and look at the codex versus scroll technology, right? Or you can even go back into ancient Near East, which was one of my earlier fields of study before classics, where you're not just looking at, cuneiform or hieroglyphics, but you're looking at like a Phoenician-based alphabet with say 26 characters. Now you don't have to be a gilded priest where very few people can memorize tens of thousands of symbols. You just know 26 characters and you can kind of get the gist of things. And so it's not just the printing press. Your point is well taken. There's always this idea of aggregation. The Bitcoin guys are always talking about it in terms of, store of value and money, and that's true, but there's also a corresponding analog in terms of communication and ownership around that, and also like your identity. All three of these things are like threads that are interwoven, and anytime you break out of that hegemony, that system of control, in which if you do a really good job, you don't have to militarily oppress your people, you don't even have to threaten it. You can just kind of shape the contours of their thought, which gets into like a whole philosophical other thread we can go down. But the way you unwind that is by using these types of decentralized technology, which allow individuals through social coordination to share economics, which is something you need to live, and also the ideas to pursue other things. And the nature of that is a fundamental fracturing, basically. With the late Middle Ages, you moved from a one thing to an alternative. And then as soon as you have one alternative, you have dozens of alternatives. And like chaos, that was the criticism. You move from a beautiful cathedral into a bazaar of like insanity. There's wars of religion and wars following up after that. And like, that's the gloss, the kind of way you teach undergraduates or you teach it at college. You go from this beautiful hierarchy into kind of chaos when the Renaissance cracked open. That's actually just like bad PR. The wars of religion and other wars, there were always wars, there are always conflicts. The difference post-Renaissance was now that things were in print. You could actually see, you had visibility into the conflict, which was always hidden in chat, which was, much more opaque previously. And so history going back and forth between centralization and decentralization, usually technology and communities, the social matrix of the use of that technology is what I see driving it. And like the question is, does it just swing back and forth neutrally, or does it ratchet up in one direction or another direction, is like a very interesting question. The decentralized technology in these iterations are much more substantive, but so too are the tools of control and surveillance and crafting your Overton window and shaping thoughts, subtly through all sorts of, facade, or call it a spectacle, different things that philosophers like to talk about. So I definitely see that as like a continuing iteration of history from ancient Near East through late antiquity, through the Middle Ages, through the Renaissance, with a reaggregation post-Renaissance into the rise of the state, and then where we are today, which, you can talk about a series of global revolutions as an extension of the Renaissance, and we can kind of get into that, not just American Revolution, but, global triangulation around that with, Britain and France. And then the United States is very much this pursuit of the pursuit of the idea of, not just political purity, but pragmatic, keep your hand out of my pocket, the ability to pursue your entrepreneurial, dreams now that you're out of this shift. Where in the Middle Ages, the church was the majority landowner. By the dissolution of the monasteries, by unlocking the monks and the nuns and saying, hey, get out of the cloister, go marry, create a family, work for your neighbor, undertake enterprise. That was the birth of proto-capitalism, and it created wealth from people using these tools, where even if the regimes didn't like the idea of losing control, what they created was so valuable, it forced them into a finger trap in which they could ignore the technology, like print, try to say, don't use it, don't use it, don't use it. But as it gains grounds, they have to use it. Same thing with, the financial, the financial primitives. And the communities that use that, you can either ignore them and marginalize them, which is always institutional's first instinct, to try to tamp it down. But then as that accrues value, which it inevitably does, because the communities using the technology is generative in nature, they become so valuable, you don't want to lose out. And there's a global triangulation game that goes on. So that's the macro thesis in a nutshell. That's a good question. We could get into like structuralism and geography and centralization and all that sort of stuff. But I think your finger's on the right pulse for sure.
Absolutely.
Yeah. Go on, you
I
go.
mean, just to kind of elaborate a bit on what we just talked about here. With
I'm
respect to the
sorry, I'm throwing a
pendulum.
lot of stuff at you quickly. I
No,
never
no,
know how
this is
high or how low to go or where to aim the arrow. We can go more detail or more summarized, whatever you like.
no, this is great. And to kind of keep going on that thread here, because I totally agree. I think it is a pendulum where we're swinging between centralizing forces and kind of decentralizing forces enabled by technology. Let's actually make the analogies a bit more concrete here, where
Sure, sure.
I think the point you're making is that the printing press not only allowed knowledge to disseminate, but allowed new knowledge to be created. It was a generative thing that enabled new forms of content to disperse throughout the society, which is super cool insight. I think it makes a ton of sense. I think the analog to that today is like language models like ChatGPT and things like that. I think that's certain, just generally generative AI, Dolly, and these types of image generation models. And now they're doing it for film and things like that, music. Totally see that happening already. And then your other point was on the financial side, ledgers and bookkeeping back at the end of the Middle Ages, which enabled the Renaissance to happen. And I guess the point we're making here is that crypto is kind of that modern day equivalent. And so I guess the question I'm asking here is, it seems like we're now moving towards this. To bring back the pendulum analogy, we're moving towards decentralization, and even stepping outside of crypto. Just what's happening politically in America and other countries too, where things do feel like they're a bit more unstable, and they are moving away from a trust in establishments and the bureaucracy that's been keeping things stable for the history of America so far. Uh, Maybe tell us a bit more about your views on where we're at today.
Yeah, no, sure. There's a lot to unpack in that. Yeah, so absolutely. To make it concrete, crypto as the new ledger-based accounting and a massive unlock, creating like generation, a new type of business model. We called it entrepreneurship, at scale, decentralizing, allowing people to make a living, pursuing different things outside the determined. So it wasn't just that you could do new things. It was also that the idea of doing something new occurred to you, which was craziness. And the alternative, rather than being subject to an institution, just accepting that by default because you're born into it, the idea that you could actually choose which institution you wanted to have affiliations with. You could choose which community and which, network of individuals, political, economic, militarily, philosophical, religious, theological. Like the idea of having choice was radical, and it was generative, not just because the technology was generative. It allowed people to pursue new ideas on the edges of the box of thought that was the Overton window of like a hegemonic construct. And so pursuing these weird esoteric things, having the economic substrate to be able to pursue them, and the means of communicating the ideas that you could make a choice and you could pursue these details and then sharing that knowledge, that was fundamentally transformative. And what happened as a result of that, just to carry the story forward, was it's a fracturing. You had one thing, one series of institutions, one type of authority. And when you say that's illegitimate, and this is like Luther showing like authority figures getting pooped out of demons in the bowels of hell. I mean, it's like crazy stuff, right? It's like, which is tantamount to us saying like money printer go burr, like for sure. But when you say
Yeah,
like
the memes of
not
back
just
in the
that,
day.
yeah, no, absolutely. When you say not just that is illegitimate, there are other alternatives, and you as an individual can make a sovereign choice between these things, and you're not going to be completely marginalized. You can actually like make a living doing that, and it might be advantageous for you in a generative sense. That was radical, and so there is a pluralistic explosion. Now there wasn't just one thing; there was not just two things. There was the opening of a spectrum with design space all along the space between the poles that allowed people to pursue these different things. And so now where you had one political regime, financial regime, control of language and communication, thought, ideology, you have multiple expressions of that and multiple communities forming. And yet there's a tension because they're forming within the institutional confines of a state, an early state, or of a financial institution. And you have these identities. For them, the idea of having one king, one faith, one society, one community, this unity was the thing that drove the medieval dream. And there's echoes of this as you go from late antiquity into like the splitting with early Christianity and Constantine. The idea if you're not all bound in a construct to the emperor, whether it's the emperor, the Holy Roman Emperor, like you're essentially allowing sedition. And it wasn't crazy for them to think that was the case because there's all this economic generation happening outside the space of institutional control, and it puts them in a very difficult situation. And so you have a fracturing of pluralism. You have different people competing, saying, "Hey, do we as minorities, whether it's religious, sociological, social, economic, do we have rights? What are the nature of those rights? How do we create political structures to represent those rights?" This is a series of wars of religion. There are always wars before. You just never had access to the site. It eventually culminated with, and I'll play the story fast forward, but it's important just to get a sense of that where we get to our history.
Yep.
That culminated with the Edict of Nantes, which was like little, not really well known. No one's into it, but it was the first like federated expression with checks and balances with like religious socioeconomic liberty for like marginalized communities within a structure. And it was a beautiful blueprint, which a lot of the American which we drew upon significantly. And there's a diaspora of people pursuing. If you didn't, even within those rights, if you didn't feel as if all things were being equal and you wanted to strike out on your own, they went into different, geographic locations, not just the American states and the colonies into South America. And there's all these forgotten histories of people that, that didn't make it as a colony and are forgot largely. In the States, they did. There's this Renaissance dream, like pursuing, this Protestant work ethic and the spirit of capitalism. These two things are highly intertwined. And I realize like people criticize Max Weber and his like critics have critics and their critics have critics. But the idea of not being in a monastery, of it's just as holy to be out like running a shop, was radical for them. And so when they did that, that created a massive economic generation, and states fought to, nation states fought to control that. Eventually that edict was revoked. Everybody went all over the place, including to the American colony. And essentially we did this revolution thing, like partially as a result of that, this taxation without representation, but it was also this idea of the French would say it was just a civil war where the succeeding states won, is their opinion, because it wasn't a class inversion. It was actually a geographic expansion where the successions won. That's how they viewed the American Revolution. But the point of the story was they were pursuing, economics unencumbered by the institution. Once again, they're using this new technology, print. They're using ledger-based accounting to be able to strike out, following this new value creation. And they didn't feel they were getting a fair shake with the institutions of the time. And there's a series of global rebellions and revolutions like all happening at the same time, and international triangulation. And so the point of the story is like, that's our history. That's our origin. And like, we tend to teach this where you have, the Renaissance, and then you have American history, and then the American Revolution is done. And then we go into something else, I don't know. And like, that's the end of the story. But that's not the case. Like the American Revolution lasted. It was a continuous affair. We rejected the first Constitution. We said we don't want a federal bank. We fought a lot, like Jefferson, the Federalist, went forth. It was craziness. And at the end of the day, we settled on this idea of checks and balances with safe spaces and safe harbors to pursue financial experimentation unencumbered. All throughout that, there was a series of ongoing, don't call them American revolutions, but those people would have seen it as a continuation of the revolution. Shays Rebellion, like paying off revolutionary debt. Most importantly, like Whiskey Rebellion is worth like a quick note on. These are people in Appalachia. So now you have read something that says you don't have to be a monk. You can go be an entrepreneur. You might be a smith, you might be a shopkeeper, but farmers were actually the most entrepreneurial of all entrepreneurs. Sometimes things grow, sometimes they don't grow. It's craziness. If you plant too much, you drive the price down. If you plant too little, you have a famine. What do? You overplant, and then you arbitrage by distilling it into whiskey. It wasn't just a bunch of hillbillies getting drunk. It was a sophisticated financial supply chain mechanism. And that actually became currency, because just like in the Middle Ages, you had a shortage of currency, like in the new nation. And so they used whiskey as currency, unregulated, KYC'd. And so what happened was there's a crackdown on that. Like, so you couldn't do that, use that as currency, and just general crackdown. And so it was unfair, it was uninformed, and people rebelled as a response to that. They didn't just crush the rebellion, it went back and forth. And there was the point was ongoing conflict of parties. And the settlement, the way they framed this was thinking about it in terms of a great experiment. Rather than having things behind closed doors, we're going to air all our dirty laundry and fight it out in the open and experiment and fail in public, which is, the American Renaissance or American Revolution in a nutshell. And so what that means is institutions always have the advantage when you try something new. So if you resist, or if you try to do something new or innovative, particularly if you're creating value or communication or changing identity, you're always going to get beaten to a pulp early on. And the bet is that you're going to be able to figure it out, over time, even though you're doing it in public. And so that seems like, ancient history, Renaissance history, American history. but that's like who we are. Like even in our own lifetimes, if you think about, oh, the SEC is, feisty, it's like, that's actually what you should expect. At the Renaissance, at the Revolution, money was worth something. It wasn't worth something. Authority was falling apart. The world as you know it is literally an Armageddon. What are you going to do? That isn't the signal that a movement is going to die. Movements die with a fizzle and a whimper. That's a leading indicator that's substantively, historically transformative. And so the continuation of that, just like we're medieval farmers, we just aren't aware that this is like our world because it's the air we breathe. We've been doing this for decades, even in our own lifetimes. Like anytime there's something new and transformative, our immediate reaction is not only to regulate it, to ban it. Obvious things like cars. We tried to ban cars and we said, okay, I guess we'll have seatbelts. But things like much more on point, like fractionalized equity, the company, a limited liability company. We fought that like mad. That was trashed in Twitter and Apple newsfeed of the day and the newspapers. They said, if you have a limited liability company and fractionalized equity, it's going to be a disaster. That's why you have oil barons and railroad barons. You only work with family and people you can trust. Otherwise, they can sue you. It's an indemnification function. And so by fractionalizing equity, all hell's going to break out, et cetera, et cetera. We tried to ban that until we didn't. That created what we know as the stock market or the NASDAQ, right? So we tried to ban the Dow. Like, just think about that for a second. And then when that didn't work, we decided regulators weren't just going to make sure that it was a fair playing field, but we were going to choose what you could invest in. So classic example is like Massachusetts, like banning, saying you can't buy Apple stock at the IPO because it's too risky. And if you would have put it 1K in, it'd be worth 1.25 today, right? Like this is what we do. That's even in the 80s. Like that's how we go about it. And if we're not doing that, like as technology outpaces the institutions, we often try to use the shells or crafted institutions to try to not just regulate the technology and tax it, but actually like tax the control of the communication and form identity, which is much more subtle and philosophical. It's a form of hegemony. So like great example is like the United States Post Office. Like we've kind of forgotten about this. They tried to run email. We wanted to like have like, e-com services run by USPS, basically them running servers, giving every citizen, once you KYC'd in, an email that was .us. And the executives, they have great quotes. They say, hey, we have a plan. Every American gets a free email for now with a suffix US. It's a great opportunity for the Postal Service. If we can control mailboxes and what's sent effectively, certainly we control email addresses. When that didn't work, they tried to tax email. That's written off as like silliness now, but multiple senators, like we've done that like significantly, not just send you a bill for email. We do it through ISP, like taxes and fees now because we're more sophisticated about it. Same thing with like global financial derivatives. Like we avoided gold and ETFs, drove a flight, creation of the Eurodollar, flight into the UK and London basically was us responding to financial innovation in the traditional banking system. Or even more closely to home, you can think about things like net neutrality or code as free speech. When we first started encryption, it was considered a munition, which gets you landed in prison. That encryption is the basis for online credit card payment, e-commerce, trillions of dollars. You wouldn't be able to. Everything that creates economic generation in technology, particularly if it's more distributed outside like a institution that's mismatched, we try to ban it. And so crypto, of course, we're doing this. It's right on par. Part of this is like an innovator's dilemma. Like part of it's just positioning because like the bureaucrats, it's a safe bet for them to make to fight something, particularly if they're going to be out in a couple of years, the lawsuits aren't going to be resolved. You get all the benefits, but none of the egg on your face. And so like you should expect institutions to have first movers advantage. You should expect volatility. But what you're betting on is that by opening the kimono and exposing the underbelly, all this stuff happens in the traditional world. You're just not seeing. And so by exposing that, you're going to get punched like very early on. And if you're an entrepreneur and have done a startup, you know what that's like. You're going to get punched. Crypto is rendering everyone into an entrepreneur. So expect an uphill fight, volatility. That's a good sign. And like where we're at right now is there's a further acceleration between like the delta for like institutional technology outpacing institutions. Part of that is with crypto is this new printing press, which is like fundamentally different than what we've seen before, and working in conjunction with a series of other new technologies, AI as well. Like not necessarily, there's a bit of a frenemies, dynamic where technologies have different drivers. Some are centralized with a locus, some are decentralized, some have economic generation across a long tail, some are like in a fang model, like a medieval lord. They're harvesting the fruits of your interaction. And so like we're at this path to see how this shakes out. Back to Dave Deere's point, like does technology like always like liberate? Not always. Like the way to frame it up is if you have decentralization, it's because of technology, but technology doesn't necessarily decentralize. And so that's the point we're at as things are accelerating, where we get into crypto and AI. But how about that as a recap of the past few hundred years?
Not bad, not bad.
I'm joking because historians hate it when you summarize things. So we're just whipping along like, then there's a revolution, and there's something else. But like the point I hope you take away from it is that we try to ban every good thing that generates, benefit for citizens until other countries force our hand, and eventually we figure it out, and it's baked into the nature of our system.
Yeah, to your point, leading indicator.
Yeah. And the difference is like, I mean, I literally mean that when I say crypto turns everyone into an entrepreneur. As an entrepreneur, if you've done this, you know what it's like, right? Like one day you're on top of the world, one day you're getting crushed. Somebody gives you an ice cream cone, Tyson punches you in the face, right? It's like, wait, what's going on? It's craziness. You typically haven't experienced that if you haven't been an entrepreneur, because somebody is arbitraging this volatility on your behalf and at your expense. And so now you have visibility into this, and you can choose to participate. And like, not insignificantly, the communication models are all not just with a different technology, but a different business model that isn't aligned with like creation and generation of not transformative knowledge, but with like harvesting interaction, like where you throw off data, which is worth ungodly amounts of money. Data is the oil, which has powered, FANG as a global state for the past several decades. You give that away for free. You've been trained to give it away for a cheap subscription or a freemium. Like crypto allows you not just to invest some money in a coin, but to monetize your own data, which is, depending upon whose math you believe, worth, 7-8 figures over your lifetime. And not just to monetize your own data, but to use that for product development to generate alpha. There's various trading platforms coming online where instead of having a mosaic effect where you have things de-identified, you can opt in and create that and like get equity as a part of that. So even as AI is doing, jobs for you, you might be getting generative value out of that actually accelerating. So there's ways this can work out like over time, but it makes you an entrepreneur. People aren't used to getting punched in the face. That was the experience during the Renaissance. That was the experience during global revolutions. And like, it's only this weird little period for 40 years post Bretton Woods where everybody's kind of safe and hanging out as like institutions are aging and there's no volatility. So our default is like mismatched. We're in the historical exception. And like that might have worked for boomers, but that is not going to work over time. Like just demographically, it's not even pejorative. It's like, you're not going to benefit in the same way. So you either bet against the market or get in big on something early. So you now have an opportunity, you're now aware. So volatility is leading indicator.
It strikes me that back in the Middle Ages, in order to have this transformative change to society, you needed not just the idea, which could be propagated through the printing press, but you also needed the means, which came about from the double entry bookkeeping. And I think this conversation comes at a really interesting time in the market, because obviously we're sort of in our second year of the bear market in crypto. A lot of people are saying maybe it was a scam all along, maybe it is completely useless, but look at this nice shiny AI thing that's going on. That seems exciting, but it strikes me that there's a really good analog here, that the AI side of things, and probably internet as well, is that the idea mechanism almost. But you need the crypto element. If you want to opt out of nation states, if you want to opt out of the traditional banking system, you need the means in order to do that, not just the idea.
No, that's so well said. It's not, there's ways that this can be antagonistic. Like obviously, like if you're following a FANG model where there's a couple companies controlling AI as a subscription service, and like they're using data that they've already created, and you're in some sort of model where you're giving your data to them and the result of a subsidized subscription, like you're not going to participate in the generation, right, in a meaningful or significant way. There are a variety of ways where this does work out as a virtuous cycle. Proof of humanity, you can think of this as not like universal basic income, but equity. Instead of you throwing your data away, you actually get ownership in the generation by contributing your data. We're trained to think of data as not valuable, but like Google isn't a computing company, it's a data company. Amazon isn't a ship you a little box company, it's a data company. This has driven the greatest accumulation of wealth in like history by like us contributing data. Now we have a mechanism for accrual on that. And so like proof of humanity, like data, but also the ability to like, even kind of in the real world, to turn your cost centers into revenue generation. And so like that's like a different idea that allows you to pursue these different these different business models. In a FANG dominated world, and if AI is part of that FANG model, you have these moats, right? As an entrepreneur, the first question venture capitalists ask you, how are you going to break through the moat, right? How are you going to break through the moat? And it's very difficult. It's a legit question to ask. Like, crypto's power isn't just better, faster, cheaper, but it's solving the moat problem. It's solving the 0 to 1 problem. That's why DePIN in particular is like super fascinating. What has the biggest moat? It might be healthcare, it might be biotech, but it's probably telco, right? Like, it's physical infrastructure, it's billions in OpEx a year. How can you create a network? Well, you can over incentivize early adopters until you have meaningful network effects, right? And so, like, the ability to overcome moats and crack through economic like institutions which are stagnant, have horrible NPS scores, that's like stunning. And so, like, that's the power of crypto, is like a business model which can overcome moats and also allow you to pursue like esoteric interests, things along the edges, which are not economically viable for like venture capital, but are just as lifestyle. A lot of the most interesting things come out of that. Like, once you're a public company, you're rarely innovating your way into a next Unfold, right? It's like Apple buys something, Google buys Android. And so the ability to like go after these things instead of going through like a VC's Rolodex is incredibly powerful. So how does AI and crypto play together? If you think of crypto as a biz model, which we're typically not talking about that, right? We typically talk about crypto as finance. I'm kind of pushing the envelope by saying it's also communication. When I say communication, I don't just mean like a new Twitter. I mean the broadcast layer, which can get cut. Like, so that's why DePIN is super important. The mobile piece of the stack, that's why things like, Solana, SMS, incredibly important. However you do it. Like, controlling the stack, like A to Z, is like super important for that communication. But even if history rhymes, it tends to follow this path with these 5 buckets, where you start out with finance, and then you move into identity and like value accrued, then like new types of work at companies, which we're getting into with crypto and AI, and like we can go through some more of the details, and then into education, not just institutional certification, but perspicuity on chain, like your GitHub repository is like proof of attendance, proof of experience, proof of expertise, like, which can be done through different models of governments, quadratically weighted or weighted by previous expertise. And so instead of having to use an institutional stamp or seal on a diploma as a proxy, you can work directly. And so if you have expertise, that allows monetization. And so AI may end up being very similar to open source, right? Like, it creates a tremendous amount of value, but the value accrues adjacent to it. And so how do you monetize that value? I mean, Dave, to your point, crypto is a monetization mechanism, which can be structured in a way to give disproportionate, upside to people as participants, is the only way I see, preventing dystopia, basically. If you're worried about AI dystopia, you better damn well be getting into crypto.
I want to, maybe not necessarily, the right phrase might not be play devil's advocate, because I am bullish on this thesis, but kind of, let's talk about this view a little bit more in some detail, where you have these two forces, right? The Web 2 way of doing things, to your point, your Facebooks and Googles of the world, the user is the product, their data is being harvested by the company, and they're making billions of dollars from you and from all the users. And what do you get? You get to use the product for free. That's it. And theoretically, crypto, yes, if you make a decentralized version of that, maybe a decentralized Airbnb, for instance, you can cut out these rent seekers that are sitting in the middle. User gets a cheaper rate. The person putting up their house gets to make more money. It's theoretically, I think it makes a ton of sense. And I think, Peter Thiel famously said this in 2018. Maybe he's revised it, but he used to say crypto is libertarian, AI is communist. And I think that analogy holds up in a lot of cases. But the reason why I bring this up, kind of from the other view, is that we saw this cycle with DAOs, specifically like last year. We saw in the ICO bubble where everyone wants to decentralize everything, and none of these protocols ever really take off. And we can speculate as to why. I think one of those reasons is that it turns out having a centralized planner for a new application or a business, it's a very efficient way to get things done. And having a massive, Discord of like thousands of people trying to coordinate on how to build a protocol, and nothing gets done, and you have voter apathy issues and all these other issues that pop up. Haven't really seen, anyone successfully like disintermediate social media, for instance. I know there's protocols out there that are trying to do it, but the numbers aren't even that impressive. Even stepping outside of crypto, for instance, and just like the decentralized Twitter, I forget what it's called, Mastodon, I think. And even like the Truth Social and the what Trump put out, they struggle to get any adoption. I don't know. How do you react to sort of like this idea that theoretically what we're talking about makes so much sense, but yet we haven't seen a decentralized approach to doing this work out yet? Like, why is that?
Yeah, no, it's like that's a super good question. There's a couple different ways to tackle that. So one way to think about it is like just how early we are, right? Like you asked me about being a founder before, right? Like when you're a founder, what you do is you build some software where you're using something similar to what you guys were using, like Tableau on a lamp stack, that you go off in the corner, your code's closed, you don't really have community interaction, you have some clients, you can kind of deal with them a little bit. You don't have a stock price, you have valuation, people aren't, it's kind of black box, people really don't know about it. Like now all of a sudden, like with crypto, so that's like a different playbook from AI. AI is you build the product, you do the regulatory work, you release the product into like a warm field, and then it's already fait accompli. And like, what are you going to do? Oh, ban it. Like that's your playbook, right? Crypto is like very different. You're building in the open. You're like sharing this as a startup. You have a stock price from day one. That's craziness, right? Like if we had a stock price, it'd be horrifying. You'd be up 1,000% one day, down negative infinity the next day. If a competitor could fork our code to force our product development, complete insanity. If the clients were talking to one another and saying, hey, it's like you're doing something, you're now playing like 60 chess or whatever, right? So like part of it is like we're doing a type of entrepreneurship that is fundamentally new. It is like the Renaissance. It's like we haven't done this before. And so like that's part of it. And you have visibility into it. And the institutions are stacked against that. It's going to like you're going to lose the early rounds. It's just your team that's constructed to like lose early. It doesn't mean you're going to win, but if you win, it's going to be like a late stage comeback, right? So that's part of it, just to kind of set like what we're seeing. And so what I mean by that is our perception of time gets fundamentally compressed in this, right? We say, why hasn't this happened yet? Oh, we have Lens and Farcaster and like DISA. It's like a year old, 2 years old. We haven't put it out. It's like, oh, by the way, we didn't even have like abstraction layers. We kind of had to hand do hooks or whatever, right? Oh, okay, that's difficult. And so like part of it, and none of the talent, like it's a bunch of like tech guys basically writing it, where it's like the tech led like startup instead of the Web 2 folks like getting in and doing decent UI and UX. And so like our time compression on that, like usually it takes 2 years, 3 years, 4 years, 5 years. Like usually it would be black box. When you're aware of it, you'd say, oh, it only took a year or two. The difference is like now you're seeing it in the early stages. You have visibility into a startup. As an investor, you see that and you see craziness, right? You see startups never gaining adoption, always about to fall apart. And then it clicks, bam. And you said, oh, I knew it all along, right? You take credit for it as an investor. You say, oh, it's my idea. I knew they're going to do it or whatever, right? Like you are not only an entrepreneur, you are an investor. Like that's what's also crazy about crypto, right? You don't have to have a Rolodex to be an LP and a VC. Like it's volatile enough. You can do a synthetic thing. Oh, you like the multi-coin guys, but you're not in it as an LP. Just do Matthew Ball's like co-op index. You can do the same thing, right? Yeah. Or just the tokens are volatile enough. Do it yourself. So you now have like unprecedented opportunities as an entrepreneur, as an investor, but you haven't seen either of these things yet. So our sense of like time and expectations gets whacked. The other thing I'd say is like, and this is super important, like into a multi-chain thesis too, the way like history works is you have one thing and it's centralized. And then you introduce a decentralized thing. And everybody says, oh, frick, I'm all in on the decentralized thing and only that decentralized thing. Maybe it's a sheer decentralization like a DAO. Maybe it's my chain of choice and everything else is trash, whatever it is. Like the way technology is using, or communities using technology works is it opens up a pull. It opens up a spectrum of design space. So the idea is that different, you're going to slide the lever in different ways for different like design and use cases. Some DAOs might work really well totally decentralized, especially when we have infrastructure and tooling like weighted quadratic voting, blah, 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 blah. Like some might not work that way at all. And it might be better to have a curated experience, Some might be somewhere in between. And so by opening up a pull on the spectrum, it allows a Cambrian explosion of design space. And so we're like little kids where you say, slam, decentralization is cool. And it's good to be enthusiastic about it. We've been like chained in bounds, just getting a breath of air. Of course, you're going to say, oh man, I want to breathe free. But like being able to intelligently make like choices on the design space, that's like, you're seeing the failures of like these other things that would usually be black box and you usually wouldn't be privy to them or discussing them. What happens in the iteration is you start to get intelligent about where you set the slides on the design space for different use cases. And I think these things can coexist in a pluralistic construct, not only like within how much decentralization within anything, there'll be totally decentralized things, very centralized thing, different permutations of it on like whatever your consulting grid is. And the same thing with chains, like something as a pure value store option might work, something that's not even money, but is just like essentially like a version of like a cell system running on a blockchain, like using Turbine to get as fast as you possibly can, might work better for other use cases. And so like, that's a super good question. So to summarize, you have visibility into what you haven't seen before. Time gets screwed up. You see all the warts. You don't see the success until that comes after. And like, you go through these iterations of like picking and figuring out how to do design space. You're just seeing the sausage being made right now. So of course everybody's gonna go crazy and say, why not? Why hasn't this happened yet? Which is actually awesome. That's what you want people to say. And like AI, just one last thing, like that's shiny. That's like the theorists talk about it in terms of an object of sociality. It's like something from the Jetsons, right? It's like this iPhone. You're like, look, it's shiny. It's awesome. You share it around. People touch it and they go into it. Da, da, da. Like crypto's like HTTP, right? It's like, what? It's this protocol. It's some weird code thing. My email works. What happened? Like, I don't get it, basically. Like, and what you do see through history is you see false forks all the time. And like often those are the least successful and are walked back and you forget about them. People don't remember Betamax anymore. You only remember VHS. Great. You don't remember Laserdisc. You might not remember the internet that can't persist state, right? Andreessen's original sin. We couldn't persist state except for on like very specific protocols. We farmed out state, which is data capture and value accrual to Fang, drove NASDAQ, and now we can persist state. So we're going to have to undo that. And that's going to like take a little bit. And we should expect all hell to break out, not only from regulators, but from every entrenched business model. And these things will probably coexist. You'll probably have Web 2 versions of this stuff working. Idea that you can have anything else but for a brief change, like that's an amazing opportunity. So it's good to be like anxious, but the thing to take away from this is crypto makes you an entrepreneur and it makes you an investor, not just with your money, but with your time and attention, the incredible valuable data you throw off. How about that?
Love it. Love it. I kind of said differently is that crypto primitives and this notion of data being on chain subjects users, investors, whatever you want to call them, to the chaos of the real world in a way that has been obfuscated by layers of middlemen, whether it's investors, LPs, so on and so forth. So I think that makes a lot of sense. It's a good way to put it.
I love this conversation. You can summarize my inanity into something that like sounds good, basically. And Dave will just keep asking me about Middle Ages, which is like current events coming. It's like current events for him coming from like a classics background. And like, hey, just two other slight twists on that too, right?
Yeah.
Like, so that means the idea of investment changes. Like VC is historically super conservative, right? You put in your money, you wait till something happens. You don't need to know when to get out, right? And so like now you need to know when to exit. Like that's like difficult. How do I go about doing that, right? So that's a different type of skill. And like, it's not just Rolodex that's important, but and so not only you contributing your time and attention, but you being able to opt in your data, like crypto unlocks different ways. Typically when you're doing data and open data, and we mentioned some of my background before, you have to like firewall the stuff. I can't tie my internet data to my shopping data to my credit card data, right? That has to be like, I can buy roll-ups from, various like vendors and sources, and Google can proxy it, but usually it's firewalled and de-identified. Unless I as an individual opt in. If I opt in, that's a qualitatively different type of p-value, predictive like power that is massive. And so you see online, and that contributes to product development. So you getting a piece of ownership in that thing you contribute to might not just be music and it's cheap and you don't have to pay a subscription and maybe the coin goes up. It might be it might generate alpha. There's things, I'm not an investor in Delphia, but that's like a model that's worth looking at and how they do that. And like, that's like a pretty good example. And even if you're not into the investing thing, what crypto does allow you to do is it allows you to like pursue these esoteric interests that wouldn't otherwise be viable, right? Like if you were in Louisville, Kentucky, it's like blue collar, right? Like if you're opening up a coffee shop, like all your cost centers, you pay $10 for Apple Music or whatever. If you want to run music at a bar or in a coffee shop, it's $10K licensing fee to Sony, and they're calling up your employees all the time, yelling at them, right? And so you using something like Audius, like, no, seriously, like using something like Audius, it's not $50 a month, it's $10K a year, right? And like basically, if you want to do a business and you don't know how to code, like the problem with Audius is a lot of it's back end. It's used by games and movies. It's like not a good UI UX experience. You could throw up a splash page, like to give all the controls for different types of genre and curate the thing. You could do that as a 14-year-old kid. And like the way the incentive structure is like works, the longer the play, the creation, you could actually like generate these like interesting lifestyle businesses that are particularly like follow your interests. Like a Edgar Allan Poe cafe may not be viable until like you say, oh, I can offset my rent and my mortgage with DPIN. I can stop paying 5% to Amex, but actually like have auto staking on a perpetual swap, like, and like gain 5% that way. And now I have 10%, not pay my 10K. You start stacking these things up. And like where this also intersects with cryptos or with AI is like, it's not just proof of humanity. Like AI has no stopping point in terms of computational need. There has to be an economic like substrate to like do supply and demand balancing on AI. Like AWS isn't going to do it. And so like it's not just computing power like render saying, oh, this will solve AI. If AI works, it's going to need a magnitude order larger computing power. And it's also going to need an economic substrate to regulate that. The question is, who's going to do the value accrual in that regulation? Is it going to be FANG/OpenAI, or is it going to be like you through distributed computing? And like, if you did that, would that actually pay your mortgage and your employees, like pursuing something IRL? Like, that's the opportunity. Does that make sense, or is that too esoteric?
Well, I was enjoying that. That last piece on AI. I was enjoying all of it, but that last piece on AI. But I was just a bit confused what the difference is between something like render and then what you were just describing, or is it the same thing in terms of?
No, it's the same thing. I think in a I'm not saying this will work out this way, but if it is going to work, it's going to follow this path. That's like in history, you always get dangerous. So you have these playbooks and things tend to follow like paths, right? And like they're not deterministic or teleological. It doesn't mean if this happens, this will be the end result, but it means if you're going to get to the end result, it's going to follow a path at least kind of like this. So yeah, it would be like render. Like you need computational power, magnitude order larger. So you're not doing that off AWS, and now you can do it with render. I have like a gaming rig here, right? Like I put that on, like I'm doing that like literally at the bar here where we're using these gaming rigs, right? And so like I can not only pay for my game, but like I actually, if AI is going to get the computing power it needs, it's going to do something through that. The meta point I'm making is that like kind of bigger picture, like there is an insatiable demand for computing power, even with distributed computing through render and other things like it. Like how are you going to like stop the demand? Well, there has to be an economic function to like regulate that demand. And so that's where value will accrue. So the question is, does it accrue through AWS or does it accrue through render with you using it? And by the way, I'm also using this as like an illustration of my turning cost centers into revenue generation, make a list of all the stuff you pay for, and then say, hey, how do I actually like get paid for participating in it? If you have a rig down there you're using for a business, being able to do that, like turn it on at night, like that's you might end up making more from that than from your billable hours running a design shop, which is like crazy, but it allows you to pursue esoteric interests. And like, that's where like the really interesting stuff comes from. And like, quite honestly, that's the stuff that like is meaningful in an AI or synthetic context. You want humans doing more of that, not less of that. So by AI working with crypto, that could be a virtuous cycle. I'm not saying it's going to be, but like if it is, it'll follow a pattern like that. Does that answer it? Or let me know if I'm getting too crazy on edges, Dave.
No, but I really like the idea that, that really what these technologies allow is optionality. You were talking about this sort of breaking away from hegemony. And obviously back in Middle Ages time, that was the ability to maybe enter the merchant's class or to be able to get credit to maybe do up your house or something. It's interesting what you're saying now, that potentially there are ways that you can really finance your lifestyle and and raise a family by turning your house almost into a revenue generating business, if you like, or when you're driving around, turning that into revenue generating business again through this deepen avenue.
Optionality, like back to the entrepreneurial thing, like when we did our first company, we left, kind of Portland, Maine and Boston and Cambridge area, right? And like you could stay there and raise a boatload of money, or you could go out into the sticks and like do it on a shoestring. We have friends that, take the Kendall Square approach, raising boatloads of money, and that's fine. But like you don't have to do that, right? And so like it's similar to being able to lower your burn rate or subsidize it. Instead of, it's very similar when we did our first startup, it was a mainframe, ungodly amount of money. And then we went to a lamp stack, magnitude order cheaper. And then we're using AWS, like a light switch, right? And so like now the next order is like, what if it's not just a light switch? What if you can actually generate off the investment that you've already made pursuing your thing? It's like an economic engine or battery, not just powered on like a Web2 startup, but powered on like an IRL space as well, whether it's a household. So, and that particularly, that's like super beneficial, like anywhere you're doing that. If you're doing that in Manhattan or what have you, it's also like really beneficial if you're off like in the middle of nowhere in the sticks. It's like what's super transformative in terms of like the delta in that generation is much more significant for people along the long tail of the distribution curve. So if you're in Louisville, Kentucky, like you being able to pay $5 for a cell phone plan instead of whatever you're paying Verizon is like stunning. It's like a massive public good, right? It's potentially more transformative. It's like underestimated from like a public health perspective. Like that's craziness, right? That's not going to affect you so much if you're in Manhattan, but everywhere else. So like in terms of like distributing like economic value creation, it's proportionately more impactful for people like on the fringes and on the margins. And you can benefit wherever you are. It benefits those folks like significantly, and you can choose to structure your own path like in different ways. You now have optionality. You don't have to do it, but like you have the option to be an entrepreneur and an investor in yourself with your time and attention. You've been conditioned like a medieval lord has said, you don't have any other options. Give us all this, harvest our fields and give us the gleanings and like basically don't worry about it. We'll pay for your housing, right? Give us all your data and we'll give you a freemium subscription. Like you're tricked. You don't know how much that stuff is worth, and not just how much it's worth in the current system, what it can generate like through like, deduplicating a mosaic effect to do alpha generation through different things. It's like, it's craziness, right? You might be able to pursue like non-financially viable businesses. This building I'm sitting behind was like, it's a 150-year-old, bourbon bar, which was a grocery store named after this horse down the street from Churchill Downs. It was slated to be mini storage and a parking lot. We put a DPIN note on it for $500 in an app and like basically paid the mortgage and did a historical transformation. Yeah, we got lucky because of price action, but like the point of the story is like it's possible to do that sort of stuff now. And like, what does it have for a community effect? It turns, if I showed you pictures, it's like heroin fire after heroin fire down there, police all over the place, disastrous for neighborhood property value. And like now, benefit IRL, like it's craziness. It's the difference between like a coffee shop staying open or like going closed. So yeah, it's very significant in terms of that. And so like where AI removes drudgery, the ability to capture economic substrate from using this, like where that value accrues, that's kind of my point on the open source, is accrue adjacently. And if so, who owns that? Like I'd want to be involved in that. That's at least optionality for you to pursue it.
So I want to actually now crank this a little bit even more, just make this even more of a ridiculous discussion. But one point we keep honing in on, which I like this point a lot, is this idea that people are living in kind of a state of drudgery. We brought it up with respect to the Middle Ages, and now in modern times, where unknowingly we are kind of subject to all these centralizing forces that are permissioning us in terms of financial rails we can use and ownership over our data. So one trend that is similar to all of what we're talking about is this idea that like sort of my bull case, why I'm a hyper mega bull for like the metaverse, quote unquote, for AR and VR experiences, especially VR, but AR too. And now we saw with Apple's Vision Pro announcement, more people are waking up to this. And one of my reasons that I wrote about in a paper that I've talked about is that most people in America, they live in uninteresting towns where it's you basically your Friday night's going out to Applebee's for trivia night or something. There's not a lot to do. Now you don't even have malls anymore because they're all closing. You kind of just work, you drive to some place, maybe you work at a strip mall, you come home. There is a bit of a drudgery to that experience that I think is already being solved by apps like TikTok and these kind of infinite feed sort of YouTube, TikTok, things like that, where you're on your phone a lot. But the metaverse allows people potentially to escape even more from that day-to-day experience. Like, what are your thoughts on the metaverse broadly? And I think there are a lot of analogs at how it connects to AI, but also crypto potentially too.
Yeah, no, that's like one. It's just like when we talk about the Renaissance, there are dozens of Renaissances before the last one. There's been ongoing Renaissance. It's just the last one succeeded so thoroughly it eclipsed all the previous. So when we talk about like the American Revolution or global revolutions, it's like that was always ongoing. We just remember one in particular. And the same thing with like the metaverse. Like one way to think about it is synthetic versus real, right? Versus, physical. And like that's like the truth of it is like the when print came out, they saw it as synthetic. They saw it as not real. They saw it as replacing writers. They saw it as replacing like manumission. They saw it as replacing scriptorian monks. They saw it as synthetic. They charged people with black magic. You left your body. You lost track of time. You weren't aware. Where did you go? That surely that's like spiritual uncontrolled. You went into another world, a synthetic, an artificial world. It's the same thing with earlier incarnations. And then you came back. You went somewhere and you came back with knowledge and that affect this world, that sounds like magic to me, right? Like the synthetic unlock, basically. So we've been doing this like very consistently. We've been doing this through Web 2, to your point, with TikTok and other things. The difference is we haven't had like ownership in it. And so like, yes, there will be technology where it becomes more and more real. We're on this trajectory, like for sure. Like the interesting part about this is like the ownership piece of it, which is like significant. And like it also gets into like, there's like a fracturing or a splitting or an abstraction or a bifurcation. Like I think like this is how it tends to play out. Like when you can go synthetic, like instead of having an amalgamated thing, I need to be in the place with the most stuff and the most experience because I want what I wanted. I want to be able to get it. And I don't want to be apart from it. Versus like a bifurcation or like a abstraction layer where I say, if I can have any experience anywhere, anytime, regardless of where I am, then that frees me up to go other places I wouldn't otherwise be willing to go to otherwise for fear of missing out. And like what might actually happen in like the most virtuous cycle is where you have a renaissance of regionalism, like Wendell Berry, like local, like supply lines, like culture, like tradition, all this sort of stuff. Like that actually might be driven by the metaverse. Like we always tend, like in the moment, people always pit one thing against the other. Like what tends to work out is they're both like spaces, they're both pulls on design and like sliding that lever along. So yeah, to your point, the metaverse might free, you want to have like crazy experience, you have a synthetic one. Now you're free to go anywhere. Oh, you can live and raise a family and do stuff over here, especially with your ownership. You don't have to go to a horrible day job. Oh, by the way, like that actually makes me like have time to ponder what is unique and what is particular. Call it like boutique or curated or indigenous. Like it actually might be like this might tie together like very well in terms of like regional IRL indigenous with metaverse. They might not be like opposing forces. So no, I think that's significant. Like in the moment, we always choose like one thing and focus on one pole. It's going to be either or dichotomy, and like that's also the same thing on the chains too, right? Like anytime you have adoption, you have like zealots and like zealots, maxis, whatever you want to call them. Like they serve like a super important historical function because they're going up against institutional resistance that has like early mover advantage. And so they're going to get squashed. So they have to be kind of crazy. That is super function. Like the mark of whether a movement like succeeds is like how well you move like into multiplicity or pluralism, like not calling it coexistence, but literally saying different things work in different ways for different use cases. And some people frame this, in terms of chains, it'll be a duopoly. It'll be like OS or, Mac or Windows or iOS or Android. But like, that assumes that crypto is like one thing. If it's not one thing, if you say like there's value storage, there's financial derivatives, if it's generative, unlocks perpetual swaps, if actually having telco and like proof of history and time functions for different use cases, there might be multiple creation along those things. And so like, hopefully you get the overall theme in terms of this like pluralism, not just one thing, but multiple things, AR, VR, like regional IRL, crypto, business models that allow you to like have a family and pursue, your particular interests that aren't financially viable in and of themselves. And even like what particular tech stack or chain you use to do that. Like that's kind of the historical model where if it works, it's how it tends to look. I realize I'm tying a bunch of threads together, but it's kind of the same model.
It felt like during COVID that it was almost a peek behind the curtain. And it gave people a pause to do exactly what you're just saying, to really consider what's important in life and where they want to do. And just personally, as we discussed before we went on air, I was living in London a year ago and have since moved to the south of France. So, and that was obviously aided really by these Web 2 products, Zoom and whatnot. But it's all part of this movement, it feels like. So, I mean, Sovereign Individual, I don't know if you've read that, but that's all about moving away from from having a specific network state and being controlled basically by the country that you're born into. Balaji talks about the network state, and it feels like there's just this move towards finding your group, finding your people, not being location hamstrung, and being able to work anywhere, live anywhere, and and find your clan.
Yeah, and it might even, like, if history rhymes, there's kind of it's not deterministic, but there's like there's like contours, right? It's not like teleological, but there's like shapes and forms to it. And like part of that is you start out with one, right? So like, when you first had pluralism coming out of the Renaissance and the technology opened up the idea of multiple things and choice and being able to pursue these different things, and the world crumbled and they recreated it. There's like this 2x2 grid. It created a Z axis or a third option. And so there's this 2x2 grid you can use in political theory. And it's like, hey, fiscal, social, conservative, liberal, and you kind of like say where I'm fiscally conservative and socially liberal, or I'm da-da-da-da-da. That's like the matrix, right? And then when you introduce this new thing, all of a sudden it's a cube and it's a z-axis. Like, hey, I'm like not Holy Roman Emperor, but I am like this and this, and the other guys are like this and this, but they are pro-Roman Emperor. So am I closer to? So what has a greater value for me? Am I closer to people that have these shared values with the exception of this one thing? Or is this one thing like incredibly important to me, right? And like, that's kind of the point we're at right now. Like, and you see this in the discussions with the chains and like maximalism and like, just full disclosure, we have like multiple chains, multiple tokens, like I think there's use cases for this stuff. So I'm like very Gen X, like realistic in this stuff, but like, there's this mindset that it's like chains have values encoded in them. The way to get rid of conflict and wars of religion and kind of toxic, maximalism is just to have one chain. And if everybody has one chain, they'll have one values and they'll hold hand like they're in a Coke commercial in the 60s or whatever, right? Like, that isn't the way that history works. Like, you kind of find your tribe and you do your stuff. And then over time, it might not be one to one. It might be one to many. You might have one tribe for one. I'm not saying you're saying this, but this is like a straw man for like what you typically hear out there. You might have one particular like identity and tribe for one particular context and use case. And you might project and retract that identity. Like right now we're used to identity. You have it, you can kind of go anon, maybe have like a duplicitous identity. But the idea of having like you as an individual with like multiple identity and like control over that for different use case across different ecosystems and different contexts with different tribes, like that's like, that opens up like worlds of like better life and generation. And like, so we're in the early stages now. Balaji network state, for sure. We're seeing this. One thing, go find your tribe for sure. If we did that with Web 2, like imagine with crypto, the ability to do that, like exercise multiple interactions along a spectrum of design space simultaneously, which is like very exciting, basically. So yeah, I agree with that and think like we're just kind of scratching the surface, honestly. It's a little bit esoteric, but I won't go too philosophical on you. Is that totally esoteric?
No.
No.
Yeah, it's like if you get into like a lot of this comes out. I mean, like honestly, if like Marshall McLuhan's like the Web 2 darling, right? And what's his first book? Mm-hmm. Gutenberg Galaxy, like the creation of like mass media, right? He's saying like Gutenberg and Luther like created mass media, and then like all hell breaks out, blah blah blah. You go into panopticon and spectacle and kayfabe and blah 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 blah. And like basically like McLuhan is just like cribbing from like Chardin. Basically, it's all over his letters in the archives. And like Chardin's like, hey, imagine if you had this interconnected consciousness through technical rails, like you could actually control information and like have like a sort of synthetic reality, he doesn't say AR or VR, like what would that allow you to do as like a world computer and shared experience? And so like all the stuff you guys are getting into, there's like historical continuity and like there's a whole philosophical conversation like around this, but like this is exactly what you would expect. And so when I say, I think it's just like tip of the iceberg, like there's historical and like kind of philosophical like reasons for that. Like you're essentially like engaging in black magic. You're just not getting charged with it today. That's a history joke that works in some audiences better than others.
For sure. There's this conversation or topic we just talked about with respect to identity. It just reminded me of something I thought about recently, kind of like observing how I guess older generations, boomers, like my parents, use technology and how scary it is for the notion of, for instance, generative AI could do something such as like imitate my voice and call my mom and like say some ridiculous thing and get her to do some ridiculous action, which is horrifying on multiple fronts. It's like the, robocalls on steroids. And so I almost view crypto and cryptography, which was funny. You brought up how it used to be considered a weapon in the 90s and we had to kind of fight to have the right to use it. This idea of people signing transactions, this idea of proving you're human, whether it's directly through what WorldCoin's doing or indirectly through economic value, I think that is going to be so absolutely crucial to almost combat this inevitable kind of attack vector of AI and generative AI to manipulate people. And so, I don't know, I think it's super interesting to think about it from that perspective, how these two technologies can really complement each other and almost like they need to complement each other to be usable. And I just thought it was interesting that you brought up this other point that we don't have to have this monogamous relationship with our identity because we already don't do that. Like we all have different friend groups. Exactly. And even kids these days, they have two Instagrams. They have their Finsta and they have the one that their parents can follow. So it just feels like this convergence of a
Wait,
lot of
what?
interesting trends.
Wait, what? My kid's doing. My kid's doing what? Wait, slow down. No, sorry. Keep going.
So, yeah, it's just like a convergence of all these primitives we have that I think it just makes too much sense, and we're gonna almost see an acceleration of what people are already doing in terms of
No,
identity.
it's like this is. I mean, I hate to keep harping on like historical analogy, but like hopefully it
Mhm.
provides some like context. We should expect craziness, volatility. You're now an entrepreneur. You're now an investor. Everything that was black box you can like see into now. Like so, but this is what happens every time you have like decentralized communication generation, right? Like when stuff was printed, I used to write a letter and sign it with my wax seal, and I had my wax seal there. And I
Yeah,
like you read hundreds of manuscripts, you know, a fake wax seal from a real wax seal, right? You know which scribes are writing what, right? But it's like now I print something and somebody signs my name. Like the world of print was like
Mhm.
mash up and mix up and like pseudepigrapha. Everybody was assigning stuff to everybody else. When I read a
Yeah,
book or a tract or an image from you, I didn't know it was you. It said it was you, but I didn't know that. That's why they're always asking, like, "Hey, did you write these things? Did you write?" They're going back and forth. Like it was abstracted information from creation, and the way that that was traced was through ownership. You actually get paid for that. You have printer's contract on that. Let me see your ledger. Let me see the counter signature on the contract, right? That's the way you solve that when things got real, like whether it was, you know, spurious content or economics tied to it or whatever. And so, like, this is like what we do. This is like definitely like the way to preserve that is not just proof of humanity, but on chain transactions and like, you know, whether it's like, and being able to limit the idea of like spectrum with poles and moving a slider on what you need to know. I need to know something without everything. Oh, that's one way
exactly.
to think of like a ZK, right? Like, oh, I
Mhm.
can know something without everything. Like that it's and your point on identity is like early out, like we're all kind of zealots by nature because if we're in this, like that's how we're wired or whatever, right? And so,
Mhm.
like, yeah, but do I have to? It's not like you know the Matrix where you're like, you know, so and so by day and like Neo by night, and you have these two things and they never talk to each other, right? It's like, no, no. Like, if I have a board ape, can I not have a CryptoPunk? I can't.
Right.
Can I? Can I not? Oh, if we have stuff, if I happen to think like for whatever reason, like if I want to have like app-based like blockchain for enterprise and I want to deploy Cosmos on something because I'm doing this specific use case and like I and then I say, hey, I need to have like and I think pension funds can do Bitcoin and I think like I want to do something that has like you know telco DPIN with like massive throughput for I can use Solana. Oh, I can't do all those things because I can't like
Mhm.
really like that's like over time we move from one to one to many, and that's like Dave to your point on like location and Balaji stuff and like with web 2.0 and then Sal to your point, that's like kind of how stuff will shake out. It will move into this pluralistic construct where we'll look back and we'll say, wait, is that real? Were those Huguenots and those Roman Catholics really killing each other over that stuff? That seems so crazy, right? That doesn't make sense. Like we'll go back, some historian will go back through the Twitter archives and say, wait, did so and so really say this about Solana? Like, what kind of jackass? It'll just seem like so weird to us, right?
Totally, totally.
I think, like, just the core thing to take away from this is like you now have visibility into what's been hidden from you. So when you say, why
Yes.
isn't this working yet? Because you're seeing this, you don't get to buy anything until it's IPO. Or maybe
Mhm.
you're an LP in a venture fund and they give you an opaque like partners letter. Maybe you do some crowdfunding thing and then they ghost you. Like you now have visibility to start up on day one. Like what you're seeing in crypto, honestly, is super tame. It's super
Yes.
smooth. Like if I showed you what went on in like Web2 investments or with our own startups, like you'd go nuts. Like this, it's crazy that it's working. That's the surprising thing about that. And you should expect crazy volatility because you're now seeing this. You should expect resistance from institutions and for them to win early on. And like the way to think about like the opportunity is to embrace this pluralism, technical, identity, geographic, philosophical, like all this other things. Like not to say you have to like believe everything at once and do everything all at once. Like it gives you optionality to pursue these different things. And like by being an adherent of one thing in one context doesn't preclude other things in other contexts. It's like history works out. Like the key thing is like you actually can see the stuff in the open and you have optionality to like not only shape your future but the future. So like make the most of the opportunity if you're you know if you're you don't have to be an entrepreneur investor not just with your money but with your time and attention, but you have the option to do that. And so like give it deep consideration because it might not just be benefiting you but like your neighbor and the neighborhood and others around.
It strikes me that we're very fortunate, really, to be witnessing all this stuff happening because, if the last time it happened was 500 years ago, then yeah, I count myself very lucky to be witnessing it and being a part of it.
Oh, no, that's so well said. It's like the grand historical irony is that most participants during the most substantive, like transformative times are the least aware of it because like it's such deep currents that you notice the ripples on the surface. You can't really feel the currents. And so like we're actually aware of it this time, which is insanity. And even the smaller ripples and waves, like code is free speech. Oh, you don't really remember that. Those kind of black box. Oh, the creation of like fractionalized equity. You don't really remember that. Was it euro dollar thing? Yeah, I don't really know it. Like that was like in some newspapers. Did Mass really bar the sale of Apple because they were deciding what was risky and what wasn't risky? Yeah, I guess that was in a newspaper one time. It's like now we have visibility into all this, and like if you believe the bet that visibility and sunlight is like the best way to create stuff versus like black boxing stuff, doing a reveal and saying here we go, like that's the bet you're making. And so like I'd encourage you, like all this volatility and craziness, it's a feature, it's not a bug. It doesn't mean it'll work, but if it does work, it's going to look an awful lot like this.
Right, right. Um, Kind of like, I guess, a closing question, because
The
we
last
talked about
questions
a
are
lot.
always the craziest.
Oh, yeah, yeah. Yeah, don't worry. We'll live up to that, hopefully. Um,
Okay.
so I think it's clear that all three of us are pretty bullish on crypto, and it feels inevitable to us. Like, let's call them insiders, just people that are really close to what's happening here. But imagine a potential listener or a person that maybe is skeptical of crypto. Maybe they've just seen the bad headlines, or maybe this person thinks, oh, the dollar's fine, everything's just gonna keep going the way it's been going. Like, what would you say to someone like that to perhaps open their mind? Like, would you point them to a specific period in history, like we've been talking about, the Renaissance, or would you maybe point them to some trends that kind of paint this picture where crypto and AI and things like this have to replace what's the status quo is? Like, how would you think about that?
Yeah, I think depending upon who you're talking to, if they're kind of story based or humanities based, I think it's one big story with different chapters in it, from Middle Ages into the Renaissance into formation of country and the Great Experience. The thing I'd say, I'd point them to that, and I'd also point them to like the weird thing is that most history, if it does its job, like liberates us from like our immediate context, right? And like
Hmm.
sometimes when it's super volatile, it's helpful to know like there's been analogs previously, so don't get freaked out. But if it's been super stable, it's also helpful to know like this was atypical, right? This was like a weird thing that happened. Like this super stability, like basically like where we had like key demographics and coming out of World War II, we made a guns for butter trade and said everybody get on board. That formed our like first world, you're with us, second world, you're against us, third world, uninformed, basically. Like that sort of like geopolitical, like deep water navigation, like enforcing, global fleet, like that is like a weird aberration. Like we're coming out of like the 70s, the math stops working. It's not an accident you go off the gold standard. Like everybody that graduates college goes in partner track. There's partners, like stuff breaks down. You'd see that in trends for like institutional, like lack of faith in this, all this sort of stuff, blah 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 blah. So there's a bunch of stuff you can point to along those lines. Like I'd probably point them to AI. If I'm bullish on crypto, counterintuitively, I'd point them to AI. Like AI, if it works, it'll be the shiny thing, like Rosie the robot in the Jetsons, and you'll say, "Rosie, do my math problem. Go do my work for me." If crypto works, like you won't hear about it again. It'll just be the fabric of reality. It'll be HTTP and links on the net. You won't even know. It'll be the stuff that guides it. It'll be the way in which like you get paid for participation. You won't think about it. You'll just think about it in terms of finance and communication and value and identity. And so like I might point them to AI and say, hey, if you don't want hyper concept, things are changing. This is the way it can actually work out for you and your benefit. And if it works, you'll forget about this. You don't know what like HTTP is, do you? No, that's because it's working.
Really well said. I think it's almost like it's a prerequisite for AI systems to work to have an internet native primitive like crypto to then call on and use to power those networks.
Yeah, no, for sure. It's like, I mean, one way to think, like a play on the Teal quote is like AI is coming for your job, crypto's coming for your soul. It like allows you to like pursue esoteric interests, like with an economic substrate where you can like sign off on other stuff and like pursue what wouldn't otherwise be possible. And so, but like they're different in terms of aggregation versus disaggregation. Like those ideas, it's like how the economic driver of that, solving 0 to 1 and solving moat and like asymmetric advantage to people along the distribution curve versus like Web 2 model. It doesn't have to be that way. So if it works in a virtuous cycle, everyone will know AI and that'll be cool and shiny. And like crypto will be the dark horse that like nobody talks about, but powers everything. So it's qualitatively different in terms of its function that way. So I'm betting on if it works, that's how it works. And so I don't see another way for it to work. And that actually could work out pretty well, but definitely like trying times, volatility, like it's understandable you get shaken. You're now like an entrepreneur and an investor in ways you haven't been before. So I'm not saying stay the course. I'm saying like make an informed decision. If it works, this is how it should look, how it should feel.
Amazing. Well, Josh, this has been a super fun conversation. Covered a lot of ground, and I think I'm gonna have to go back in this episode and look into some of the things you brought up. But thank you so much for joining us.
Yeah.
No, thanks so much for having me here, and really appreciate what you guys are doing. Like this idea of like showcasing other ecosystems and doing it in an intelligent manner. I definitely appreciate it.
Really appreciate it.
Kind words.
Thanks, Josh.